What's up, YouTube? Welcome to the fourth lesson. This will be about the ranges, avoids higher highs and higher lows because we always take that with us. So what is a range? A range is within time where price sticks in between. So this is the most clear example. This is a range, like from here till here, very vaguely. Yeah, you have some more like this, from here till here. And yeah, just where the price sticks in between and then it goes out. And where it goes out, like here, it's a void. So a void always, most of the time, gets filled. If it doesn't, you have to wait. To trade on the voids is like a very abnormal price action. So it's very good if you're in the right direction. You can make a lot of percentages. So if you look at the most recent void, which is the most clear, I think, we go back to the higher highs and the higher lows. So this would be low, this would be the high, this would be the low, and you can see that we have lower low, so we expect a lower high, which would be the entry, the range for an entry short now, because we are shorting is here till here. This was very, very bearish, so the market is very bearish, so you want to take an aggressive short. This was like really aggressive. You would have got filled by like a couple of cents, maybe a couple of dollars, but you would have got filled if you took the most aggressive entry. Where does it go to? Where do you want to take profits? If you want to be sure, you could have calculated that this would be, you would have took a short around here. Maybe you think, now compression is incoming. But if you don't, you go look. If you don't think there will be compression, you will be going to look for a new low. Where could this low be? These are going to be levels or specific price points. So the new low could be around here or around here. Yeah, maybe higher first. So yeah, you never know. So you just put in some limit orders and your TPs will get filled. But the thing about this trade would be, where do I put my stop loss? I'm going to talk about that in a next video. So if you want to trade on the voids, you want to, so if the low is formed, you could probably imagine that you want a long around here or something, and yeah, have some TPs. And if we look back at the higher highs and higher lows, you have the range, you lose it, you go back up, you test this one, it gets brutally rejected. So now we go back down. Could it be that we're going to be here for a long other time? It could be, maybe compression and it goes back out, but you never know. But the best structure, if you look at the theory books, would be that you have a range, you get out of it, you have a high, you have a low around here, you have a new low, so you have a lower high, so you expect a new lower low, and it would be here. So you have here a next void, because if you look further, yeah, this is not that clear, but if you look on the really high time frame, because higher time frames are more important, so if we go to the weekly, you have clearly a big void from here till here, from here till here, and you have this little hiccup in between here, so it would not be abnormal that we are going to see 10k into the future. So now we bounced off on this little hiccup and we go to the next one. So this would be an aggressive entry, this would be a defensive entry, and here is going to be a big void probably. And yeah, a void is where the price is abnormally. In a day you can get a 10 plus or a minus 10%. In ranges you want to trade the highs and the lows, so if you are in a range you can day trade a high, you have a low, so you expect a higher high, you go slightly beyond it, and so that goes on. The thing is, you always have ranges. Alright, and let's put the low around here. So it's not in direct waves, so you have always, like here, you have a period where the acceleration is breaking off and you go to the low. So you go back here and then low, and the points where it goes up back again, sometimes brutally, this is called a void. So if you get out of here, you get into the void and you go until the next range. You have like, it's not always a void, but most of the time it is. So if you look at here, you have like a period in time that it's like in a range. Then it goes down. This is the void. And yeah, you go back into the void always a little bit. And yeah, you look for the next point that it's going to drop off. So at this time it was here. So if you look at here, it went not that high. But the thing also is, if you look at the void on lower time frames, you should look for the green candles within the void. So you can see here some green, some green. So that means that there is some buying power. So if you go to low, you want to get it back up, and it's at the green area. And over here, it's not the first green stuff was here. So the first thing you do is bounce off at here. This is like a kind of a level. And yeah, there is like on the 4 hours there's no green candle around here. So the next thing, this, which was a special point because it was a big wick and it stopped here. And why did it stop here? Then you should go back into history. So this was a special price point because there was a lot of buying power around here. So there must be a level. So now it dropped off here. And to put everything in perspective, this is just a variation on the highs, the higher highs and the higher lows. So a void is like starting point, high, low, high. This is the void. You have a range, you have another void. This is the range, you have a high. This is the void, you have a high, you have a range, and it keeps on going. So if you put that back in your backpack along with the other videos, at the end of the series, I hope you will get a better view on the trading happening. So thanks a lot for watching and see you in the next vid.